What is up, YouTube? This is the Working Investor. In this video, we're going to go over the market performance this past Friday, and we're going to compare some of the ULMAX funds to the overall indexes, and we're going to talk about some of the shortcomings of the ULMAX funds and how they work to mitigate these shortcomings, and just go a little bit into the option strategies. Let's get into the video. So as you guys can see, kind of anticlimactic because they kind of give you the big crux of everything right at the beginning. The market, we all know, has been down on Friday. And you can see here, the NASDAQ was down 2.38%. The S&P 500 was down 1.28%. The Russell 2000 was down 1.49%. And I was just looking at gold as a reference, and gold was down 0.18%. So everything has pretty much down overall in the market. Bitcoin, right now, Bitcoin trades 24/7, but relative to the market, Bitcoin actually is up because the market, I think it was from 88,000 to 90, went up to 91, and now it's coming down to 90. But this is reflecting, Friday into Saturday. But if you look at ULTY, you'll see that ULTY also was down, but ULTY was down 0.82%, and YMAX was down 0.17%. So of course, these funds are not impervious to the fluctuations of the market, but relative to the market, if one fund is down less in a lesser quantity or magnitude, then I would say it outperformed the market. So if you look at spot, and when I look at ULTY, I kind of look at, because ULTY has large cap, they do trade large cap stuff like the Magnificent Seven. They do trade tech, they do trade small cap. So that's why I have to kind of look at all the indices. But ULTY was down 0.82, so they actually beat the SPY, the QQQ, and the Russell. And then YMAX is down only 0.17%, which is not bad relative to the market. They were even down less than the amount that gold was down. And I look at gold because I try to look at commodities as well. So again, this is only one speck of time. It's only one day. It doesn't tell you much. One of the things, my thesis is one of the reasons why I believe that YMAX and ULTY were down less relative to the indices of the market is because they do carry exposure to Bitcoin, and Bitcoin was up. I know it's, like I said, it says down, but it was up from 89,000 to 91,000. So maybe the components of Bitcoin may have been dragging it up. It also could be that the options that they do, specifically ULTY, they have hedging in there as well. I wanted to talk about something I was looking into for quite some time. I have a thesis that Bitcoin is correlated with tech. That's my thesis. And my thesis is not just a guess. My thesis comes from, I heard this on the people at Tasty Live. They did some research and they came up with this. But there is, although Friday disproves this thesis because Friday you saw an inverse correlation. But if you look, you'll see that there's something called the correlation coefficient. So it tells you how strongly something is correlated. It goes from 1 to -1. So -1 is an inverse correlation, and 1 is a positive correlation. So long term, as you could see here, that Bitcoin has a coefficient to the NDX, which is, the futures I believe it's the futures of tech, of 0.8. So about 80% correlated. So this could be one of those days that wasn't correlated perfectly. And they even go through, Google AI, love it, brings out even ranges, between 2020 and 2024, it was 80% correlated. But the 90-day correlation between Bitcoin and NDX was 0.46 since late August. So recently there has been a little bit of a shift, that maybe it's a little bit less correlated. But there is you have to argue that there is some correlation with Bitcoin and tech. I just wanted to go over a little tangent, something to think about. But some days like today, like Friday, they work kind of in opposites. Just something, such a fun tidbit. I just wanted to reiterate, the cover call strategy and then the weaknesses. Of course, there's some strengths to the cover call strategy, but there are also some weaknesses. And the weaknesses that I'm going to be referring to is something with a, with a V-shaped recovery. If the market goes down really swiftly and goes up really swiftly, that's when there is a shortcoming with the cover call strategy. And that's not yield max, that's just in any type of cover call strategy in general. And the closer you put the calls to the money, the more it will have an impact. So it may have more impact if you write calls closer to the money. But let's talk about, as you see here with cover call, just a quick little review. You are selling premium, you're getting paid premium, and you see the green over here that you're capping your upside, because technically speaking, when you own underlying stock, you have an infinite upside. But when you sell a cover call, you are capping your upside. In exchange for capping your upside, you are receiving premium. And that's how a lot of these cover call funds generate cash, in the form of premium, which they pay to you in the form of dividends. That's how they capture it. But if the market goes above the short call, then it won't gain any more upside. So going back to this. So if you look at this chart over here, you see if the market is going up, I think this is the NASDAQ. I was trying to look at pictures of V-shaped recoveries. So you see the market is going slowly up, gradually up and up and up. The people writing calls, the managers, they can constantly keep, writing the strikes little by little, and it'll slowly capture, maybe not all of it, but it may capture a nice chunk of the upside. But if the market goes down really, really, really swiftly, I'm not talking about these little bumps over here, but I'm sorry about the zooming in and out, guys. But if it goes down really swiftly and then it goes up really quickly, they may cap the upside right near the bottom. And then so by having cover calls, like owning raw stock and writing calls against it, or having synthetic cover calls, where you still, unfortunately, experience the entire downside, the downside momentum of the roller coaster ride. You may not necessarily experience the entire upside momentum of the roller coaster ride. So that is something that is a shortcoming. That is just a shortcoming, a weakness that's in cover call strategies in general. But what some funds like to do, like YieldMax, is that they try to do, they call it opportunistic trading, where they do call credit spreads, and they could do that in all of their, cover call funds, as far as I'm aware, and they're able to capture some of the upside, even though they're past the strike price of the short call. They're able to capture via call credit spreads. And of course, with ULTY, they have other types of ways how they can do they have pretty much the sky's the limit with their strategies of the options, from what I've read in the prospectus. So it's very interesting to see these type of funds in fruition. Of course, if you look at total returns, it's not too compelling over the long run since inception of ULTY. But if you're looking more recently, since the past month, when they changed the prospectus, it's almost like it's a new fund. And we need to see, time will tell how it will perform going forward. But so far, it seems kind of promising so far. But I'm very excited to see how this will turn out. Anyways, this is the Working Investor over and out. I hope you guys have a wonderful weekend. Be well.